So I'm Matt Compton. I'm a general partner at the Oregon Venture Fund. I've worked and invested in fintech for a little bit. And we're going to talk about fintech, but before I start, we have two experts in the industry here, founder and CEOs, Tor and Shamir. I'll let you guys introduce yourselves real quick. Tor, go ahead.
Sure, Tor, Steen, and you heard my co-founder Darren earlier on the video doing a nice intro of CrowdStreet. We're an online marketplace to democratize access for commercial real estate investing. It's a little nostalgic be up here because it was 5 years ago. Darren and I were just talking last night at the cocktail reception. 5 years ago, we were up pitching. I think at the time we had just launched our marketplace. We had 2 deals up. We were going to do about $5 million in invested dollars that year. This year we'll do over 100 deals on the marketplace and raise $500 million. So we've come a long way in 5 years, and a big part is being here at BVC, raising capital from Seven Peaks, Portland Seed Fund, and that kind of helped seed CrowdStreet back in the early days. So thanks for having me back again.
Hi, I'm Shamir Karkal, co-founder and CEO of Scylla. Scylla is a fintech API platform. We do ID verification, bank account linking, and ACH transfers. We're an early stage company, got started about 18 months ago, and just launched a week ago, actually. My biggest claim to fame is probably that I co-founded a startup called Simple, which was it was the first neobank in the US, and moved it to Portland in 2011. That's how I came to Portland, and that's how I met Matt as well.
I spent a little time at Simple. So fintech, this is industry, there was $31 billion of venture money invested in fintech in 18, and there's been $22 billion in the first half of 19. So it's one of the, if you measure heat by amount invested, it's one of the hottest spaces in venture right now. It's interesting, from Simple and CrowdStreet and all these amazing companies, there's actually a pretty cool ecosystem going on in Portland where we're kind of outsized for fintech. Yet we want to challenge this a little bit. So if the average consumer, so maybe that's not everyone here, but the average consumer probably hasn't really felt the fintech, the financial services industry change that much yet. So with all that venture money going in and all those companies being started, what gives? Why is this taking a little bit of time? Or disagree?
Well, and we were discussing this before, but I think in some ways people don't truly understand the scale of the numbers that we're talking about. Just to give you guys some examples, the global GDP is around 90 trillion, and global financial services industry revenue is around 15 trillion a year. That 15 trillion does not go to fintech startups. It's mostly about 30,000 banks globally that capture it. And everybody from PayPal to Scylla, including CrowdStreet, combined, does not even have 1% market share of that 15 trillion. So, of course, we're barely getting started. And this is the revolution in fintech is probably going to take a generation more. These massive industries don't change overnight.
Yeah, and kind of to play off of that, I think there's a few factors. One, it tends to be a fairly regulated environment, so there has to be, at CrowdStreet's example, there was the Jobs Act that helped to kind of change our age-old, decades-old securities laws to allow general advertising of an offering, which allowed us to actually post opportunities on a marketplace. I think the second, and so those regulatory changes are helping, but they don't happen fast, as we all know. I think the second thing is consumer behavior. When you look at consumers, they're so accustomed, I'll just use a Visa card as an example, right? They're so used to a credit card, so as companies are trying to go in and disrupt that space and introduce new things, you're dealing with a consumer behavior that's been entrenched for years. As it relates to CrowdStreet, we had an uphill battle where we were faced with having to convince commercial real estate developers and operators, again, who've been doing something in a very traditional way, raising capital through different channels in different ways, to go online. And that was, it's kind of like Amazon back in the heyday, showing how e-commerce was possible. And I think today, e-commerce is still only 20 or 30% of total retail sales. So it's billions of dollars, but it's still not as big as the whole market.
So maybe, that kind of begs the question as venture investors, we hear regulated industry, we hear it's going to take a little while. We hear big market we like. Those first two things make us a little bit nervous. What is the opportunity? Why should we be excited about this?
Because even when we're talking a fraction of fraction, we're talking a lot of capital, right? So, but I think the reality is that it's not going to, it's going to take some generational changes that are going to have to happen till it really accelerates to the scale that I think people envision. But again, since we're talking, Shamir had the numbers of trillions of dollars, you don't need to capture 100% of the market, right? So even as we look at CrowdStreet and other platforms that are disrupting commercial real estate investing, today we might make up combined $2 or $3 billion a year of the $500 billion that's transacted in commercial real estate. If you look out a little bit, even if we're 10% of that market, you're talking $50 billion a year in transaction volume, which is significant unto itself. It's because we're dealing with such big markets in general.
Yeah, and we don't have to stop at the trillions. The Citibank 10 years ago processed $1 to $3 trillion across all its processing platforms every business day. The average year they processed $2 quadrillion. And you can, like, what even is that? I mean, that's an unimaginable number, right? And yet it's all built electronic for the last 60 years. The first 20 UNIVAC mainframe computers that were built and sold, I think 6 of them went to financial services companies. And the other next biggest one was like the Department of Defense in different ways, right? So yeah, financial services adopted technology as soon as it existed, right? In fact, like double entry bookkeeping is a form of technology that banks built 600 years ago. And in fact, the Visa started in 1958 with Bank of America, and it was enabled by that first wave of technology, because we couldn't have had cards processing if they didn't have those massive mainframes in the 80s and 90s, right? So this is, the pitch to VCs is it's massive, it's heavily regulated, so getting in is not hard. So getting in is not easy, it's actually very hard, but once you get in, and guess what, there isn't that much competition. It is also, and the other part of the pitch, I think, is to entrepreneurs, is it is core to people's lives. A large part of people's sense of self-worth is tied to their net worth, right? So this isn't like just trying on some new clothes and you're like, I'll try it, if it doesn't work, I'll throw it away. No, people make financial decisions with a lot of thought because it's deep, right? It's the top New Year's resolutions every year are either about health or they're about wealth. That's it. And so it does take time to change. People don't change quickly. Some of it is generational, but it's always been technology-centered. It invented a lot of technology. And if you can get in and you can get it right, then the sorts of institutions that get built are massive. And we see that more outside the US than in, right? You look at companies like WePay and Ant Financial. Like, Ant didn't exist like 5 years ago, and it's like a $100 billion startup now. You're like, it's the biggest startup on the planet which isn't public. And that's because it basically captured a large chunk of the market in China. And of course, China is actually, even now, a much smaller market than the US.
So maybe talk a little bit about the incumbents, because I think that's also an interesting part of this industry. There's some ginormous entrenched incumbents. And I read some stat that 80% of traditional financial services companies are, quote, partnering with fintech companies. I'm not quite sure what partnering means, but how have you navigated the relationships with big traditional financial services company? Are they the enemy? Are they a partner? Are they, tell me how you're thinking about that.
How have I navigated that? Unsuccessfully.
We appreciate your honesty.
I mean, I can go on for hours, but if you want one word answer to that. So, I mean,
get a few words. It's
okay, fine. Now you get the long one. So Simple was acquired by BBVA, and in the summer of 14, I was at the BBVA offices in Madrid. We're talking with a bunch of executives. They said, hey, we're thinking about building an API platform. And I was like, stop. An API platform in banking? Please, somebody should do this. But do it right, don't screw it up. And a year later, I was running that business, right? And I left Simple, moved to BBVA, built their API platforms for them, and I was kind of the poster child. In fact, BBVA is still the poster child for like bank, fintech integration. And then I left a couple of years later because, I only have so much hair I can pull out. And so it's frustrating and it's hard because banks don't understand startups. And now BBVA is probably the best and has the most amount of top management willpower and some decent technology too, and it still struggles because it is so heavily regulated. And it is like, you know, there's probably like 100 compliance people who can tell the CEO no, right? Like, and you go to other places and you like get the CEO buy-in, the sale is done, right? You're like, no, no, no. Get the CEO buy-in, then get the compliance buy-in, then get these other 100 people's buy-ins, and then maybe, nah, do that once more. Now maybe you're there. So it's just like, it's just the entrenched nature of kind of how banks function, especially large banks, makes it hard. Now, there's a lot more hope for small banks, I think.
Yeah, and we weren't up against the financial institutions. We were really up against these sponsors, the developers and operators, really not wanting to change because they were raising capital through the country club, through institutional investors, and kind of the way they'd been doing it for years. And when we came to them and said, look, there's a new way to do it that's going to provide more access to more investors, it's going to provide transparency, it's going to provide efficiency, and we were dealing with people who weren't really technologists. They had not really adopted the internet and technology in their day-to-day business. They didn't have to, right? The way that they had raised capital, it wasn't mandatory that they use technology. So what we realized quickly is, unless we got them over that hurdle of technology, they were never going to come to our marketplace. So we actually did a pivot in late 2014 to license our technology that was powering our marketplace to the developers to manage their investors that they already had, and it helped kind of give them a light bulb. So we recognize, unless we partnered with them, unless we helped solve some of their pain points, they were never going to put deals on our marketplace because they couldn't make that leap from an analog world to a digital world. And so we actually saw that that was the only way we were really going to make the marketplace and therefore provide access to investors.
Well, we talked about the size of the space, some of the challenges. What do you two see as the real opportunities? It can be in your own industries, it could be in different industries. We're thinking about that $30 billion of fintech investment going to work. Where do you want to see some other companies?
Yeah, I mean, you know, the term blockchain gets thrown around a lot, right? And I think, you know, we were at a ULI conference and blockchain was a topic at the Urban Land Institute about a year ago. And it was amazing when you looked at how little commercialization of blockchain had actually occurred. And so I think when you look at technologies like that and you say, how can that help transform this industry? You know, when we think of real estate investing, it's still an illiquid investment, right? It's still a private equity investment, unless you're doing a publicly traded REIT stock. And so if you can start to digitize a product that is illiquid and make it a liquid investment, then you're truly disrupting an industry. So I think, when I think out, I get excited. Darren and I talk about the possibilities of what's going to happen. We know we had to take these steps that we're taking today in order to get there, but I think there's massive opportunities, and ultimately who wins is the consumer. The consumer is the one that ultimately gets better access, better transparency, and better efficiency and ease of investing into these alternative assets that traditionally they've never had access to before.
Yeah, can I comment on that real quick, Shamir? Yeah, so I think this liquidity and fractionalization are really interesting areas, and it felt like the first kind of couple years of fintech is basically, hey, we're better at digital marketing and our product looks way prettier than pick a Bank of America. And now companies like CrowdStreet, I think we're about to hear about other companies as well, are actually inventing new products that weren't possible before. And I know I personally get much more excited about fintech investment when we're talking about new products, new sources of data, new ways to serve the customer than just doing better digital marketing.
I think just today, Schwab just announced that they're exploring the opportunity to do fractional shares, right? So, and Schwab recently announced their robo-investing capability, right? So the Betterments and Wealthfronts who've kind of just started to disrupt that space, who are still, again, if you add it up, a fraction of the total wealth management space, it's pretty interesting.
I really like how you said digitize rather than tokenize, because we all know tokenize is a bad word. But I totally agree with you guys, right? I think there is, by the way, I think one of the areas that has the most potential in all of this is actually in real estate. And there's so many, it's it's such a large market where even small niches are massive, right? And then there's so much stuff that's broken about it. Anybody who's ever bought a house, sold a house, invested in a REIT, or done anything with real estate is just like, this is so confusing, weird. No, I don't even understand. Spent 30 minutes signing stuff and I don't know what it was, right? And the broker explained it to me, but I hope she was doing the right thing. And I'm pretty sophisticated in this way. But that's, I think, real estate, there's huge opportunities. I think insurance, like InsurTech as a space, it's barely scratched it, right? Like, and then I think the blockchain will transform everything, but it won't be a blockchain. There'll be many, many different versions. And I think eventually blockchain will just become like cloud, right? Like nobody goes and uses a startup because they're a cloud startup. They use a startup because it provides a valuable product or service. Now, building it on the cloud comes with some benefits, and AWS does serve, I think, 2% of internet traffic is served by AWS, but most people on the street who never even heard of it.
Well, I think we have a few minutes for some questions from the audience. Oh, I see people. Where's the box mic? We got some questions here. I think we got right here, maybe? Or right here, standing up. Nice catch.
Thank you. Excellent discussion here. I'm curious where you see some of these opportunities. So one company that's gone at kind of residential, but a very specific slice of residential is Open Door. They're going at the cookie cutter, $300,000 in a suburb in Arizona, as one way of, opening up this marketplace. What other ones do you see?
Well, I mean, there's Open Door, there's Fly Homes in Seattle, and I'm blanking out, but I know there's at least 2 more. And funnily enough, I think I've spoken to like executives at all of those companies, and they all explain to me how none of them do actually directly compete at all. Even though you might think they do just by kind of looking at it. I think I'm almost like, if you can create a great map of all of real estate, take a dart, throw it, wherever it lands, go start a company. Every dot will be like a 50 billion, and you just have to understand it well enough, figure out the regulatory space, figure out how to transform it. I assure you, all of it is broken and all of it is bad.
So that's a great comment. You got some good laughs there. But what's an interesting industry that there's a lot of broken shit. Can we say shit here? There's a lot of broken shit in this industry, and that is just prime for startups, right? We love investing in industries where there's a lot of broken stuff.
Every now and then I'll find something which is actually pretty efficient and works well at scale, and I'll just be shocked. I'm like, wow, this works well. How does it? It's highly unusual when you find that in the world of finance.
Go ahead.
Hi, I'm from Oregon State University, and my question for you is that as students in college, as we're in this weird transition time from technology starting to emerge in the financial space, and things like Simple Book being expected to be replaced, or brick and mortar being put online, I was wondering, what would your advice be to someone that would be interested in going into finance for my generation? Like, as you're speaking about generation trends, how can we adapt? Thank you.
Yeah, that's an interesting question, and I'll have a play on that, because as CrowdStreet, one of the things we've had to do from a talent acquisition and recruiting perspective is bring people in from financial services. So they came out of college and they went and got a pretty traditional job with a large company as an analyst, a financial analyst or a real estate analyst or something like that. And so they got some experience that was directly applicable to what CrowdStreet was needing. So we needed that DNA of somebody who kind of got that real estate or finance experience, and then applying it into the tech space. And they love it, right? Because they've come from a more traditional background, but we can leverage it as a tech company and same thing with people with commercial real estate background. So I think for CrowdStreet, selfishly, what we're looking for is that those recent grads might go to, we've recently hired some from a CBRE or a Cushman, JLL, places like that, Prudential, where they got a couple years of experience and then they were ideally suited to come to CrowdStreet. We've also hired some right out of college with a finance degree who came right into our kind of investor relations group because they already had a finance and investments kind of understanding, if you will.
Yeah, my advice would be learn to code. Right, like, so my background, right, my grandparents were bankers, my parents were bankers, my 3 generations ago, kind of my family started almost the entire banking industry in India. So growing up in the 90s, I was like, I'll do anything except banking and management, right? Every teenager has to rebel. So I went off to study physics and computer science, became a software engineer. They brought me here to the US for like 6 weeks. I haven't left, and it's been 16 years. I went to business school because I couldn't go to business school in India. I was in the US, so I went to business school here. And then I was like, oh, there's a lot more to this world than just coding. So I went and became a consultant. My first job was in finance. And so then 3.5 years later, a friend from business school was like, hey, let's start a bank together. And I was like, really? And there we go, right? And I think I've seen it both ways now, right? Like at Simple, we had a bunch of folks with non-financial backgrounds who we trained into kind of, we taught them finance, basically, on the job. And then I've also seen the reverse, and I think the reverse is usually harder. If you take somebody who's a really good engineer and you tell them, here is the NACHA 300-page manual with all the return codes. This is how this country moves $51 trillion, right? Batch files overnight. Once they understand that, they'll figure it out, right? And then a month later, they'll know more about it than me. But the reverse seems to be very hard, right? Like finding somebody who's spent like 10 years in finance and saying, hey, now I want you to write SQL queries and create a script and figure out how to do this with our backend database. So I don't know why, but that tends to be harder.
Great answers. Okay, yeah, hey, up at the top, I think we got time for one more, yeah.
Hi, so as you mentioned, there's lots of things broken in the current financial system. It seems like the ease at which people can have their identities stolen, credit card fraud, things like that. Anything you're seeing that you think can help eliminate that, which seems like a huge, huge problem?
That's a big one.
Yeah, you take it.
Yeah. I mean, I'll give these guys a second to think, but one thing I'll comment on is, so one, it is a big problem. I was shocked at Simple Bank, and any bank, what high percent of your personnel and effort and time is going against battling fraud, and there are people out there 24/7 that you're battling with. I will say some of the web services, some of the startups, some of the more mature companies you're seeing out there are getting much more sophisticated. Literally every 12 months, there's a know your customer new service that comes up. There's a better fraud prevention tool, and so it is a bit of an arms race. But there are good players on both sides, and so I think in one sense that might, in a weird way, spur innovation because we need the products and services in this industry to battle fraud. But it is absolutely a real problem. And I think a lot of times when people walk into the space as a startup, they don't quite realize how important part of that's going to be part of their business.
And I think I'll echo Matt, right? I think security from a technology perspective has to be kind of front and center if you're building in the financial services space as a startup, right? You have to be thinking almost in worst terms possible of somebody hacking in, stealing customer identity information. And if you don't ingrain that from day one into your engineering and technology team, you're going to be playing catch up. And so I think it's not something that you just decide to do later on, or you say, oh, here's a cool technology. You need to be thinking from day one on the security and privacy aspects of your platform. And the good news is there's a lot of services, right, that you're going to rely on to build that into your tech stack.
If the biggest barrier to sort of success in early stage fintechs is usually product market fit. I mean, that's for every startup, right? Like you got to get a product market fit. What's mid to late stage, it's usually fraud, right? You will at some point lose a lot of money to fraud. The question is, can you figure it out quickly enough, catch it, put the systems in place to control it, and then get on that arms race conveyor belt and just, there's always going to be some amount of investment because the bigger you get, the more attractive a target you are, and the fraudsters are endlessly inventive. So you need endlessly inventive people on your side to stop them. That's not going to change anytime soon. The only way to kind of solve that is at a societal level. So India, where I'm from, has a national ID system. It's biometric. There's a completely new payments and technology infrastructure, which means that the future is here. It's just in India. I just don't see that sort of a thing happening in the US anytime soon. And so as long as we're still relying on SSNs, ACH, cards, all of these systems were created between the 1930s and the 1960s, 70s, I guess. They're just not ready for this world. And so everything that we can do is just basically putting a patch on top of those underlying systems. And the fraudsters keep working away on removing them, right? So you just got to keep fighting.
So that's a great segue to some awards and some drinks. So I think we're going to stop there. Thank you so much.
Thank you.